Hello, everyone. My guest today is Dennis Kelly. He's the CEO of Postalytics, the leading direct mail marketing automation tool. He's a six-time entrepreneur, primarily focused on software and technology. He's been involved in founding, investing, and senior management roles in startups such as Genesis Business System, Anyday.com, Paul Mink, Adjoin Solutions, Computer Associates, and others. Dennis, are you ready to take us to the top?
I am ready.
All right. Postalytics, what do you guys do and how do you make money?
Postalytics is a direct mail automation tool. And what we do is we help marketers deploy direct mail marketing programs as a part of their CRM and marketing automation platforms.
Mm-hmm. One of my favorite tools is Bond, which allows me to do handwritten letters out to folks tied into our CRM. It sounds like you're that, but maybe all kinds of direct mail, physical objects, gifts, toys, etc.
You got it. We're focused right now on our launch on postcards and letters, and we're able to send to very large lists as well as small lists or triggered CRM based campaigns as well.
That's great. Now, you said you're just getting ready to launch. Are you pre-revenue today?
No, we are early revenue.
Okay.
And so we launched in early 2018.
Okay.
And we're ramping very quickly. We've signed up over 450 customers.
Oh, that's great.
In that amount of time. And folks are using the platform on a self-serve basis.
And are these 450, these are actual paying customers, not free users, correct?
That's correct. We do have a freemium model, and so folks are able to sign up and use the product for free, and then upgrade as they go, pay as they go.
And Dennis, I know you've got kind of a $0 per month plan, $199 up to $399. Give me an average. What's the average customer pay you per month?
The average customer is paying us about $300 per month on a subscription basis. And we're pulling in about $1,000 a month for paying customers on per piece fees.
Per piece. Okay, interesting. Now, if I take 450 customers and average $300 kind of per month price point, that puts you right now at about 135 grand per month. Is that accurate?
Yes, that's roughly accurate.
Okay, that's great. So you just launched in 2018. Going from nothing to 135 grand per month is very quick. And just to be clear, that 135 grand, that's just the pure play SaaS revenue. You didn't have sending fees and all that on top of it, about $1,000 a month.
Exactly.
Okay, very good. Where did you, I mean, that's incredible growth, Dennis. Congrats. Where did you get those customers from? How'd you sign them up?
The vast majority of them are Hubspot customers, and they have found us through both of our content marketing as well as our investment in the HubSpot Connect Partner Program.
Okay. And what does that investment look like? Walk us through how that works.
Sure. So HubSpot is early on, but investing very heavily in building out their partner ecosystem. And so we have been aggressively working with HubSpot's management to be sort of a premier partner. We're geographically located near HubSpot. We know a lot of the senior management team. And so we've been investing very heavily in marketing and sales enablement and doing co-marketing, co-selling. We have an agency product. HubSpot's got a huge agency partner program. And so we've really embraced a go-to-market strategy that involves a heavy investment with a very fast-growing CRM and marketing automation tool.
Yep. And how many pieces of mail have you sent to date?
We've sent about 2 million pieces of mail in the last 8 months.
That's great. Yeah, I'm looking at your pricing page. I'm just going to give a sample real quick. So for a 4x6 first class, between 0 and 2,500 copies, it's 55 cents, right? So these are the kinds of things people can pay, and that's a cheaper rate on that plan because the per month software fee is higher. It's $399 per month versus if it was a cheaper per month fee, then it'd be higher per kind of piece of mail sent. Correct?
Exactly. And so the typical onboarding process our customers are going through is they'll find us, they'll sign up for the free tool, they'll send out a few mailings in the free tool, and then as they ramp up, they move up into a subscription.
Now, if I'm paying you $400 per month, is that pure margin to you, or do you take that spend and apply it to my first 1,000, 4x6, things that you send?
No, that's pure margin.
Okay, got it. So good. I just want to say, so you don't have hard costs of the physical paper, the stamps, the envelope, and all that out of that $400 per month fee.
No, that's really covered in the per piece fees.
Got it. Very cool. Bootstrap to raise capital.
We are just starting to put together an angel round where we're planning to reach out to folks that are interested in investing in the space. We're really trying to sort of redesign the way that direct mail works And so folks that have an idea of how effective direct mail marketing can be, but want to sort of disrupt the space. Traditional printer model is the workflow and the sales process, the onboarding process really hasn't changed since the 1990s. And so we're really trying to apply a SaaS business model and a SaaS software model to this industry that still is about $45 billion a year in the US, but has really stagnated in terms of evolution.
So Dennis, how much are you looking to raise?
We're going to raise between $500,000 and $600,000 here to start.
And how'd you come up with that?
We put together a business model that allows us essentially to take that capital, expand the footprint of the product and the sales and marketing organization, and take us through to cash flow positive.
That's great. So you're raising $500,000, and are you going to do that on a convertible note or a safe? Or actually going to sell equity?
We're actually going to sell equity.
Okay, great. So you're going to do a priced round right away.
You got it.
That's great. And what are you aiming? You don't have to tell me the exact number, but what are you aiming for in terms of valuation?
In the high seven figures.
High seven figures. Okay, so call it somewhere between maybe 7 and 10 million, something like that.
Exactly.
Yeah, very good. And have you had any pitches yet? I mean, how have they gone?
Yeah, we've had a couple pitches. We've got several folks that are interested, and we're really trying to find the right partners. We want to find folks that can help us not only financially, but also through their relationships and their experiences. And so, we're early on in the process, but we feel pretty confident we'll be able to raise that money.
Yeah, and I just want to be clear too. Usually I ask people about growth rate in terms of you're at $135,000 today in revenue. Take me back a year in August 2017. What were you at? You were pre-revenue at that point, right?
That's correct.
Yeah, so nothing there. Very good. What's the team size today?
There are 4 of us.
4 people. Everyone based in Boston or in that area?
Yes.
Four
we have an extended team of contractors and part-time folks.
You mentioned one of the reasons you want to raise capital was to get profitable. What I imagine with 4 people, $135,000 in monthly revenue, I think you're cash flow positive, correct? Right?
Oh yeah, but we are planning to significantly increase our spend.
I see. No, that makes sense. But I mean, look, even though if you raise $500,000 and you then increase spending by $100,000 per month, you still have $135,000 of income there. I mean, it would be, you'd have to spend that $500,000 you raise in 5 months or less. I would imagine to put you guys into serious cash flow negative territory.
Yes, yeah. Exactly.
You have a lot of experience kind of with other companies and such. Walk me through how why not go raise 5 million or why raise it all? Why not keep bootstrapping?
Well, we're really trying to grow this company a little bit differently than we have in the past. We are interested in taking small sips of capital and small sips of outside leverage to grow the business rather than kind of take the traditional venture capital approach. And we want to build a business that is aligned around disrupting this business and building long-term value as opposed to, I guess, often meeting the needs of limited partners and things that can sort of distort the early progress of a startup.
Yeah, but you're about to be in that. If you raise $500,000, even with friendly angels, you're about to be in that phase.
Yeah, to some extent, but it's a little bit different than raising $5 to $10 million.
Yeah, definitely. Okay, tell me more about some of the economics here. So churn, what's your churn today?
About 4% per month.
Okay, and that's logo churn per month?
I'm sorry?
That's logo churn or revenue churn?
That's revenue churn.
Revenue churn per month. Okay, that's not bad at all. And how are you? People that are churning, why are they churning?
They'll typically not have success with a campaign. They'll try a few things out, decide to focus on other channels. And so that really is a great opportunity for us. One of the things that we're finding is that over 50% of our clients are new to direct mail. And so that, the actual creative piece of it is something that we think we can really bring some expertise to the table to as we ramp up.
Mm-hmm. Now, one of the things that I've got a question about is seasonality on this kind of thing. I imagine during the holidays, people are going to send out more, Black Friday deals via snail mail than they would at other times. How do you deal with seasonality in the business model and make sure it doesn't totally kill you in terms of churn?
Yeah, that's something we're really trying to work through as in our first year, right? We have to kind of see what that really looks like and understand what the model will require in order to smooth. Obviously, having the subscription revenue helps. And then the other thing that we've done recently, we've given folks an ability to pre-purchase mail credits so that they can buy in bulk and get volume discounts. And so that should help smooth, particularly for high volume senders.
Mm-hmm. Yeah, it'll be interesting to see how you develop out that model. 4% revenue churn per month. I think that's 48% per year. So you're churning half your revenue each year. You've got to, I'm sure you're working on this, but you've got to figure out some way to bring that down to like 2-ish or 1.5%, something like that. And a lot of it's got to do with pricing experiments, right?
Yeah, pricing as well as I think giving folks tools to be more effective in their marketing.
Mm-hmm. Is there value to the platform if I'm paying you and in that month I send no mail?
Yes. So what you are getting in the platform actually is campaign management and tracking. And so often there's actually a much longer life cycle of a direct mail send. And so leads and inquiries will come in weeks after a piece of mail is sent. And so we've got some proprietary tools that enable marketers to understand the actual attribution of a piece of mail to a person.
How?
So we actually have a patent pending method of delivering a unique URL for each piece of mail that is sent in a campaign. And so what you're able to essentially do is apply our tracking code into your landing pages. And we can understand, hey, this is Dennis responding to this piece of mail that was sent 3 weeks ago.
Mm-hmm. So Dennis, I have a question for you about this, because in theory, it sounds great. But I have a lot of friends that have tried this model. Alice strikes me as an example. They do virtual gift giving, and they allow customers to or CMOs to send out gifts to 1,000 customers. And there's a tracking code, X71635. Go to www.customername.com, put in this code to get your prize. They found it so difficult to tie the attribution loop because, I've never done it either. I've never gotten a physical piece of mail from, say, Restoration Hardware and actually use the code. I just go to restorationhardware.com and buy whatever I want from the direct piece of mail. How are you going to try and make sure that consumer, when they get the mail, who doesn't give a damn about tracking, actually uses that more complicated than just typing in the company name, uses that URL or that tracking code?
Sure. So there's two things. First, when the call to action and the offer is tied directly to the code, you find a very high percentage of folks that are responding will use that code. Second, there's new technology rolling out in every phone being built by Apple and by Google that will automatically scan QR codes as well as URLs. There's a new feature being rolled out in Android called Google Lens that is applying artificial intelligence to the camera. And so in the very near future, you'll just point your camera at a URL and it'll take you right to that page.
But you see what I'm saying, Dennis? Though, when I pick my mail up and I bring it to my kitchen counter, the last thing I'm going to do, I've never pulled my phone out and scanned mail before. You're having to teach the consumer to do a whole new behavior, which is a steep learning curve, specifically so your customers can track attribution. How do you make that process valuable for the end customer?
Well, what again, the first thing is really getting the creative tied to the use of that URL. And so we have clients that do that and they do it with great success.
Well, can you quantify that somehow? So if they send out 1,000 unique codes, how many of those codes end up getting activated in the first month that the mail sent?
Well, if there's a very strong offer, we see 50, 60% sometimes.
Mm-hmm.
And so, and then the other key, of course, is tying in multiple ways to respond. Right. So we'll have an ability to add 800 numbers to unique 800 numbers to a mailing and provide a wide variety of different response mechanisms.
Interesting. All right. Last few questions here on economics before we wrap up. Payback period, or sorry, CAC. How much are you spending to acquire these customers?
Right now, we're not spending that much money to acquire customers. We're very early stage. We're not really spending much on marketing. We're going to be rolling out marketing programs that will, cost some money here after we raise some capital.
Mm-hmm. Well, but let's say you're in a meeting right now with a friendly angel. They're going to ask you, well, if I give you $500,000, what are you going to spend it on? And your answer is going to be, well, we haven't tested that yet. We don't know what the payback period is, but we need to figure that out.
Well, if we're talking to an angel, we'll be providing a little bit more detail.
I see. I mean, but what cohort data will you use if you haven't done like paid testing yet on CAC?
Well, I think we're at a very early stage, and folks will be buying into the fact that this is an idea that makes sense, and I'm investing very early here.
Yeah.
Early stage unit economics are very unreliable.
No, I agree with that. I by the way, I'm not saying there are companies doing $1 million a month in revenue that don't know some of these numbers, but I'm just saying I think the thought process on the decision tree related to CAC and payback is more interesting than what the actual number is.
Sure. And so, we've got unit economics. I just don't think they're worth very much at this point.
Yeah, because the sample size is so small.
Exactly.
Yeah, very good. Okay, so again, 4 people, remote locations, too early to dive too much in the economics, looking at raising some capital here. Will you go outside of Boston, or you think you'll stay mainly in Boston and maybe look at, people like HubSpot investing directly as strategics?
Yeah, we will be definitely speaking to some strategics. We have some folks that are beginning to tap into our API that are interested in potentially investing. And we are speaking to investors outside of the Boston area.
That's great. And Dennis, how much in new AR are you going to close there at Inbound?
Good question. So we're hoping to bring in between 400 to 500 leads and go from there.
That's great. All right, let's wrap up with the famous 5. Number 1, what's your favorite business book?
My favorite business book is The One-Page Marketing Plan.
Number 2, is there a CEO you're following or studying right now?
The CEO that I'm most interested in is Brian Halligan at HubSpot.
Yeah. By the way, if he comes in and just says, okay, you're trying to raise that $7 million pre, why don't I just offer $7 million to buy the company? Do you sell?
No.
You don't sell for $7 million. That's like, what is that? That's 4x your ARR.
I don't.
Interesting. Okay. Number 3, what's your favorite? By the way, then why raise at that rate?
It's just a number that I think will work.
Okay. Number 3, what's your favorite online tool for building your business besides your own?
Favorite online tool for building our business? Drift.
Number 4, what is your, how many hours of sleep are you getting every night?
I get 7 to 7.5 hours of sleep.
That's pretty good. And what's your situation, Dennis? Married, single, kiddos?
Married, kids out of the house.
How many?
2.
2 kiddos. Very good. And how old are you?
I am 52 years old.
All right. Take us home, Dennis. What do you wish your 20-year-old self knew?
I'm sorry?
What do you wish your 20-year-old self knew?
I wish I knew the value of balance in my life with exercise, family relations, and the things that you sort of pick up over the years in terms of life balance.
Guys, balance is important. Dennis, CEO of Postalytics, looking to raise $500,000 on maybe 7 to 10 million pre-money. They've scaled fast, just launched, went from nothing to $135,000 per month in pure SaaS revenue across 450 customers. Bootstrapped today. They've got 4% revenue churn per month. He's exploring ways to drive that down. Too early for most of the unit economics, but the growth so far is impressive. Seriously cash flow positive with just 4 people in all remote locations around the States. Again, founded here in 2018. Dennis, best of luck and thanks for taking us to the top.
Thank you, everybody. Have a great day.